Good morning, everyone, and welcome to the DecisionPoint Trading Room. It is June 5th, and we are here to get you ready for the week. I am here with my father, Carl Swenlin. My name again is Erin Swenlin with DecisionPoint.com. Couple of housekeeping things to pay attention to at the beginning. If you'd like to give us your symbol requests or questions, please use the Q&A box. If you'd like to chat amongst yourselves, I do have a moderator in the chat room. Fred would be happy to welcome you into the room. And go ahead and say hello, tell people where you're from. It's an extra dimension to the trading room that we like to encourage. All right, Dad, I think that's all of the housekeeping I need to do in the beginning. And I know you have a couple of interesting charts you want to share with the group. So let's do it.
Right. Good morning, everyone. I decided to cover a couple of stocks, companies that decided to be, instead of selling product, to initiate social change. I don't want to comment one way or the other on what they're aiming at, but I just wanted to show how it's not quite such a good idea to lose your focus. And when you take one side of a political argument, you've got half of your audience doesn't like you for it. So here we have Budweiser. We know Bud Light, the big problem there. This was happening. This started right around in this area, and so when I thought about covering these, it's about 2 weeks ago, and maybe somewhat longer, but it was not apparent then that any damage was being done to the stock, although there was a lot of talk about the market cap was being taken off by the decline. And it's best when you hear this stuff to look at the chart to see what's really happening. But it has basically taken hold, and it's really causing a lot of problems for Budweiser, really, really bad problems. Again, focus on selling beer. And I'm not a stockholder, but if I were, that's what I would say you should be doing. But here's Dow Jones US Brewers Index, and you can see that it suffered some here, but this is a very small decline on the Brewers Index. This from this top here is 8%. For Budweiser, it's a 20% decline. So it's really started to kick in. Let's go to another one, recently surfaced, Target, comparing that to the retail index, XRT. Let me get that description. But there's the retail index, and you can see by the way, Target is not one of the top 10 components of that index. I presume it is in there, but it is not in the top 10. There's some similarity here. But you can see the index itself was really hit pretty badly here. Let's just check you see Target from, and I'm not even sure that what the controversy was about was an issue back here. This is in January. Let's try that again. Percentage change, 16% down. For retail index, it's a decline of 22%. So the index was hurting well before the Target problems started in. But here I think you can say that awareness of the problem started. So now we see from that top right there to last week, we've got a decline of 22% versus 9% for the retail index. Anyway, as I say, when you start hearing these controversies, take a look at the chart if you care at all. And let's now shift over to talking about the market. Last week, the S&P 500 really took off on Thursday and Friday. We had Thursday's launch was very narrow, and it's again involved the handful of large tech stocks in the S&P 500. I heard this morning it's like 8 stocks that represent all the move that we've seen, and well, probably from most of the move from March. Anyway, we had a very narrow rally on Thursday. Friday, it really broadened out, so you have to start paying attention as it comes down to let me look at I want to see the climax assessment. You can see on Thursday, we've got a upside initiation climax. It was very narrow. Again, it involved the S&P 500 net AD volume and the up-down volume ratio for S&P 500. Anyway, on Friday, it really broadened out, and we have to pay attention. But Thursday was an upside initiation. We only have one of those in the direction of the move. So the next one has to be an exhaustion climax. So right now, it's backing and filling on that. We don't know what's going to happen, obviously, but we still need to be alert if this is going to go higher. Right now, we are coming off an exhaustion climax. On the 1-year daily of the S&P 500, we see it broke out of this rising wedge formation. That's not the way they're supposed to resolve normally. So that's especially bullish in that regard. You notice we had a huge spike of volume on Thursday last week on the S&P 500 total volume. I was never able to discern where that came from. Naturally, the financial stations didn't have anything to say about it, and it's significant. Again, I'm still not sure where it came from, not sure what it means, but it's very unusual. We only see that kind of volume usually on option expiration days, which it wasn't. Looking at we've got a couple of new charts. Let's see. New highs, new low for NASDAQ. And this is an end of day chart for these new highs and new lows, but you can see on Friday how we had a very high spike in NASDAQ, and the NYSE new highs and new lows was also spiking up. Okay, let's move on to the dollar index. Here we have a very unusual candlestick, and it's never been corrected. So obviously there was some trade that was made down in this area. When you see something like that, my advice is to ignore this spike down because it's just out of character. If I was, using it for the trend line, I would just draw right through that. I wouldn't have anything to do with it. Okay, so dollar. Excuse me.
I was just going to say, Martin Prang often will call those kinds of candlesticks Pinocchio bars, right, because they don't really tell the truth about anything going on.
So you notice that the dollar was down on Wednesday Thursday and up Friday, and it was up today, but it's backed off. So it's actually at a loss right now. That's good for gold. You see on Friday, gold was down considerably, but today it's held once again held on this line of support. I want to look at the weekly chart to emphasize we've got a very orderly rising trend channel here, and this is as of Friday. It's an end of the day update, and it seems to be coming off of that rising trend bottom, and we hope as holders of gold that it's going to go through, finally break into new all-time high area. The Saudis last week cut back their production. It's going to start the first of next month, 1 million barrels a day. And that has gotten some rally in oil, but it's not following through today. It looked like it started to, but this is not a very happy looking candle. It could be another top. Treasury bonds, 20-year plus, starting a downtrend. However, it caught hold and it's actually above Friday's close. So perhaps that's it in that little short downtrend. Treasury yield, 10-year Treasury yield, it's been up today, but right now it's lower on the Friday's close. So still looking like a rising trend. This is as of Friday. Our yield array showing everything from the 1 month, or not everything, but showing from the 1 month to the 30-year. And we are inverted for the most part. Right now, the 3 month is yielding as of Friday, 550. And that's the highest of this group. Bitcoin, I always try to skip that. Got this rounded top, and it's broken down through this support line again. We'll see how that goes. We've got a PMO downside crossover and below the zero line, so that's just even more bearish. I don't think I'm going to cover that today. Here are the high-tech stocks that have been carrying the market. And as of Friday, these were not up that much, but you can see Apple has finally broken clearly out of this rising wedge pattern, which again, it's wrong direction for rising wedge, but there it goes. And up 2% today. Amazon is not necessarily one of the leaders in the tech rally, although it has participated somewhat. Google rounded bottom and really spiking high. That's one of the things about these tech stocks is they've got some really vertical advances, and when you see that, you've got to look for some give back on that. Native platforms, you notice it's accelerating the rising trends, but it's still not anything I'd be concerned about, but it is accelerating. Microsoft is another rounded bottom, and it's fairly steep, but still I would call it an orderly advance. Netflix making new highs today, and also an orderly advance here, and now it's starting to get vertical, so watch that. NVIDIA, this is the one that caused all the excitement, and last week, it started the week before, and they have this gap up, and now we've got this cluster. So there's the potential for this to do some give back. This is a vertical move. You got the gap, and the island. So look for, it's not the end of the line for NVIDIA by any means, but maybe get back into a more orderly advanced pattern. But right now, that's what I would be looking for rather than another up gap. That's not one of the stocks contributing to the advance, I don't think, but advancing today up against this line of resistance. There's another chart. This is our bias. We call it the bias chart to see what the internal bias is in the market. This as of Friday, you can see these spike ups in the participation and stocks above the 200 EMA, 50, and the 20. And not really much reaction in the Silver Cross Index or the Golden Cross Index. But certainly we got a bottom here in the Silver Cross. It'll take some time for this to transmit into these longer term charts. And have I forgotten anything?
I don't think so. And I'm looking in to see if we had any questions. I think that maybe you might want to answer this one. The question is, does oil and XLE, that rally, have some legs? Do you think that it will continue higher? I think we looked at crude oil, but maybe another look, and I can cover energy when I take the screen.
Okay, let me just look. That is one comment I should have made. Let's look at the energy. And considering the cut that the Saudis are making, maybe we'll see some next month when they actually, the cut actually goes into effect. But I'm not too excited by what I'm seeing in the oil or in the energy sector. This is not doing very much in the way of rally, and you would think that it would, but it's not. And again, USO started a rally last week, but it's seems to be losing momentum. There's another question here. Would Apple split their stock when it gets to $200? No, I don't know. I mean, it's hard to say. And that's it. There's no rule, and sometimes they don't split longer than you think they should go.
Right.
So I think that.
Okay.
Turn it back to you.
All right. Let's go ahead. We're going to get started with the sectors. Should see my candle glance right now of all of the sectors. Certainly a much different landscape than we've been seeing now that we're getting more participation in the broad markets. It's certainly made a difference on a lot of these sector charts. So what I talked about last Friday in my Diamond Mine trading room, that's for our subscribers only for DecisionPoint Diamonds. We give you 10 picks per week. Fridays, you get a subscriber-only trading room where we go over those picks, as well as do a similar trading room to what we're doing today as well, where we go through the sectors and the industry groups and the market. So I was looking at all of the sectors last Friday to kind of determine, well, where does, where would I want to watch to see that we'll get more upside? And at this point, there are sectors with new momentum. But first, let's concentrate on the ones that are rolling right now. Obviously, technology is rolling. It is on Easy Street. We're getting a bit of a parabolic rally going on here for technology, which is a little bit concerning. But ultimately, the PMO is still rising strongly. And you've got a scooter of 98.8%, the StockCharts technical rank, the scooter. And it compares all of the stock to its entire universe. In the case of XLK, the universe would be ETFs. So among all of the ETFs that StockCharts tracks for the StockCharts technical rank, it is in the top 98.8%. So clearly XLK cruising. The other two that are cruising would be discretionary and comm services. Both of these, are getting a lot of those mega caps that have really been the catalyst to this rally. And it's very clear that that's the case, just looking at the PMO, just looking at the price patterns on XLC, XLY, and XLK. And these are the aggressive sectors. When these sectors do well, we should expect the rest of the market to follow, and it hasn't. And that's been our big problem with the rally so far. We're now finally starting to see a little bit more broad participation. And so that is bringing in some of these other sectors. So you see financials have a new PMO moving. The PMO is new momentum moving upward. We have new momentum on healthcare and a nice breakout above these key moving averages. I think this one is going to be interesting to look at more closely. Staples certainly making a turn, as is utilities, but you can see those PMOs still really not quite turning up. Energy, which we just talked about, does have a PMO buy signal that's come in, but again, price pattern still looking a little bit suspect. We do have a double bottom here, so we can look for upside breakout, but currently it is staying, price is below that level. XLB looked really interesting on Friday with that big gap up move. And now you can see that price is above those key moving averages of the 50 and 200-day EMAs. And it looks like we now have a brand new crossover buy signal. So this declining trend has been broken on Friday, and now we're seeing some nice little follow through to that. Real estate was the area actually that I liked the best when I was looking last Friday. And that is due to the breaking of this short-term declining trend, the fact that price had popped above both the 20 and 50-day EMAs, and we're seeing some follow through today. The difference is that this scooter is much lower than some of these others. So this is what I would call new momentum. As with healthcare, with its low scooter, this is new momentum. So we want new momentum because that gives us the most opportunity for more upside. However, it also comes along with some risk that we do need to be considering, simply because, we've got these downtrends in healthcare, we've got these downtrends in real estate and in the materials area. So even though we're seeing some nice movement on those PMOs, we do need to be mindful of the fact that those scooters are very low and that we can get those reversals to happen at the turn of a dime. So at this point, I'm going to go ahead and concentrate on healthcare, real estate, and materials, just a real quick peek through what's going on with them. But let's go ahead and get to the list I need here. So we're going to concentrate, like I said, we'll look at healthcare, real estate, and materials more closely. Here you can see the break. The declining trend hasn't quite been broken, actually, now that I'm looking at this. It's in the process of breaking it, but we haven't quite broken that declining trend just yet. It's in the process. But notice here, we do have a declining trend channel. This is not a falling wedge. That means this is not a bullish pattern. It does suggest we will see that reversal, so in spite of the fact that we do have that PMO turning up. But here, this is what you're going to see on a lot of these charts, is this really big improvement in participation, breaking some of these declining trends that we have. So certainly healthcare has some upside potential. The stochastics are rising. So that looks pretty good, but price is looking a little bit iffy still. I would really want to see the breakout here on healthcare before I would get too excited about it. Next, we'll look at materials. Rounded top does look like it's trying to break from that rounded top. PMO on a buy signal, like I said, brand new. Look at the improvement in participation. These declining trends, again, in participation have been broken. Stochastics rising strongly, and we are seeing some outperformance. Overall, though, I think this sector looks good. I do like it getting above the 50 and 200, and I like seeing this expansion. But I really would like to see that Silver Cross Index moving up and above its signal line. And we don't have that quite yet on materials. However, we do have this going on in real estate, which is why this is my sector to watch going into this week. You can see that the declining trend has been broken. You can see the new PMO buy signal. You can see the Silver Cross Index making a nice big move above its signal line. Same with the Golden Cross Index. So those are looking good. And then look at the increase in participation, much higher than what we saw on materials and on healthcare. Stochastics rising nicely, and we are starting to see some outperformance here. So really, when I look at the two sectors and look at this is a declining trend channel that this has been a breakout from. So I would say real estate has some really interesting possibilities. All right, so that covers the sectors. Let's go really quickly and look into some of these industry groups for real estate in particular. So we go to our industry summary here. It's excellent. We can go down now and look into whatever sector we want and look at all those industry groups. We're going to go down to real estate. And there you go. Diversified REITs, you can see a nice move, breaking that declining tops trend line, PMO buy signal. This one looks a little bit, real estate holding and development, a little bit too flat, not somewhere that looks as exciting as the others. Real estate services have been on a really nice rising trend, but it is getting a little bit stale and old. But certainly we could see it move a bit higher and test these highs. But that PMO is getting a bit overbought on real estate services. Hotel and lodging REITs, PMO new buy signal, stochastics rising, price pattern a little bit volatile for me. Industrials and office REITs not really going anywhere, so not the industry group to really go into. Mortgage REITs, I like the breakout that we're seeing here, but it's still kind of moving sideways, not the best setup. Nice breakout from a declining trend here on retail REITs, but knowing what we're seeing in retail overall, I don't know that this would be the industry group I would be looking at. Residential REITs making a really nice move. Stochastics now above 80, broke its declining trend, gapped up on Friday. I really like the look of this particular industry group for residential REITs. And specialty REITs also looking pretty good, but that declining tops trend line hasn't quite been broken. Neither has that 50-day EMA. So really when I go through this, I like the diversified REITs. I like the retail REITs somewhat. I like the residential REITs. Those are really the kind of areas that I'm liking in that real estate area. That covers that. That leaves us, Dad, with about half an hour for symbol requests and questions. Were there any questions in there that we needed to answer or address?
First, I would like to comment on real estate. Every time I see commentary on real estate on the business channels, they're major concern about commercial real estate, like they have occupancy rates of like 50% that they keep up. I can't be more specific than that because it's not my field, but I don't get it. Of course, we don't see an industry group showing specifically commercial real estate, but none of those charts look bad. I mean, none of them look horrible, and like you said, it looks recovering, but something to keep in mind.
Yeah, there's industrial and office REITs right here. And excuse me, you can see that really the price pattern is sideways. Certainly a new PMO buy signal, but definitely not one of the more exciting industry groups. Excellent observation.
Okay, I see a question here. Carl, could the volume increase on Thursday be related to overseas buying post-debt ceiling relief? Possibly. Actually, by Thursday, they hadn't. I think the House had passed the bill, but it had a ways to go from that. So could be. That's as good a guess as any, for sure. Let me see if there's any more. Is this a blow off for Apple or the beginning of a new extension up? Well, if I were thinking of buying, I would be afraid that it's a blow off. I don't think this is a great time to be buying, which, will probably be a hollow, empty comment in about a few months, but you never know. So for ACCD.
All right, let me grab the screen. I figured we'd stop that share while you were discussing the question. All right, this is actually a prior diamond in the rough and certainly doing exactly what I had expected it to do. The question is, of course, on whether it's a long or whether we keep it, whether we hold it. I'm guessing it's a diamond member who is asking what to do with it now that we are getting this rally. I see this as a great chart here. That rounded bottom on this, that cup-shaped bottom. You can even see kind of a cup here with a little handle that came down here on that decline, and now a continuation. Everything on this chart looks healthy. There's nothing on this chart that I would say doesn't look good. I would be expecting price to come up here and test this area of gap resistance. That means a move up of at least another 10 to 11% on this one. I really like this chart. Like I said, I presented this as a diamond 2 weeks ago, and it still seems to be doing what it should. So as a long, I think it looks pretty good. Let's go quickly and look at a 5-minute candlestick chart, because that is where we determine our entries and our exits in the trading room. And as you can see right now, we are getting close to a buy point. It's not done much today. That RSI has been positive, negative, positive, negative. So the RSI is not going to be really helpful on an entry here. So we really depend on that PMO. I would be looking for that crossover to occur here soon. So this doesn't look like a bad entry. If you're coming to a chart, a 5-minute chart, and you want to do an exit, all you're looking for on that is a PMO, a 5-minute PMO that is topping. That is your exit point. And that usually is going to get you out at one of the higher prices on the day, usually at a top. So you'll get your upside out of it and then protect yourself from the downside that probably will follow through the day. So right now it's looking, the PMO wants to give us that crossover. The price pattern doesn't look that great right now, but overall, I like the look of this daily chart. And I think we're going to see more upside out of this particular stock.
Okay, PLTR.
Palantir. All right. Wow. Big, nice move. We currently have a bullish engulfing candlestick here that implies we're going to see more upside tomorrow. This one's really overbought. That would be my biggest beef with this one, is you do have a PMO rising. Everything looks very good on this chart. Stochastics above 80. But I don't think this is really where I'd want to be entering this stock, simply because it is so very overbought and it's due for a pullback. I would be putting this one on my watch list. I would want to watch for that pullback that eventually will need to come to relieve these overbought conditions on the RSI. But as far as, the software area has just been, as an industry group, outperforming the S&P really most of the year. So this has been a good place to be. And if you're going to be in this place, this is one of the stocks to be involved in. Look at how Palantir is performing against its group, the software group. It is really outperforming the group, and the group is already outperforming. Consequently, this stock is outperforming the S&P by a mile. So I like this one. I think that it is a good long, certainly for holding. I just think that entering right now, you're adding a little bit more risk than I'd want. Plus, with a 6.5% rally today, I would expect to see a bit of a pullback coming into the next few days.
Erin,
But man, that is really overbought.
Erin,
Yes.
this is a pure play for artificial intelligence.
Ah,
And another one is Microsoft, and I believe Apple's in it too. So but Microsoft and Apple aren't pure plays, but this is supposedly pure in that area. So that explains that rally at the end of the chart there.
right. Kind of with NVIDIA's step into that AI area. Now it makes a lot of sense. So we could see some follow through, but ultimately it's really overbought. I'm still would be hesitant to enter this late in the game.
Okay.
And just for, since we're talking AI, before I do the next one, bots, if you are interested in this area, this is the ETF that you can use to play this area without going into a particular stock. And you can see that it's doing quite well. We do have a little bit of a parabolic rally going on here, which means we'll probably see a pretty big breakdown. But for now, this one's looking pretty good too, moving forward. It's overbought, but not nearly as overbought as Palantir.
Okay. LI.
All right. Li Auto for the automobiles area. All right. I have some problems with this chart. Filled black candlestick is bearish. We're not getting the bearish follow through so far today, so that's a good sign. But I do not like the way the PMO is. Yes, it is surging above its signal line. Surging meaning we're getting bottoms above the signal line. So that's what we call a PMO surge to the upside. So while those are really good to see, this PMO is pretty overbought. RSI, not quite overbought, just about getting there. Stochastics looking a little bit wishy-washy, but this is the problem for me with Li Automotive, and that is that it is not performing well against its group. The group is finally starting to outperform. Li is not outperforming, and you can see that that is pushing it to perform in line with the S&P. Not a bad place to be, performing in line with the S&P, but we have seen stocks where they're outperforming the S&P. That's where I want my money, not where it's just performing in line. So I think that at this point it is a hold, simply because we do have those PMO bottoms above the signal line, but I don't think that I'd be interested in entering here.
Google.
All right.
GOOG.
That one, okay. Class C. Similar look with that PMO surge above the signal line, which we like to see. In this case, we don't have any filled black candles except for way back here. RSI is overbought, which seems to be a problem here. But again, here is your issue with GOOG, and that is that it is underperforming its industry group of the internet group. You can see the internet, excuse me, my voice is all over the place. You can see that the internet group has been outperforming, but Google right now is starting to underperform its group. And consequently, it's actually underperforming the S&P by a little bit here. So again, not one of the stocks that I would be going toward, just because the relative strength isn't as strong as it is on some of these other stocks that we have looked at and will look at. It's certainly a hold. There's nothing breaking down on this chart. So it looks like a good hold, but I don't know that I'd be a buyer. I just think that we can do better.
Yeah, I'm surprised that Google was not named as one of the stocks. And that, this is just something that I saw on the business channel, but was not one of the stocks for AI, which to me is, if there's any stock, any company that's involved in AI, Google's certainly there. So yeah. I don't understand that, but there it is.
Mm-hmm.
Okay.
Next.
BMY.
Bristol Meyer. All right, so we looked at the healthcare sector. It's certainly looking up. I'm going to go straight to relative strength since it seems like that's what we're talking a lot about today. And this one is performing in line. Bristol-Myers is performing in line with the S&P and in some cases underperforming it. So that already gives us a little bit of a backdrop that's not quite so positive, but it doesn't look terrible. Stochastics rising nicely. PMO almost coming up here for the buy signal, and you can see the RSI is almost in positive territory. This does look like a pretty good rally. Do we have a breakout here yet? Indeed, we do. Let's see if we come from up there. So if we come from over here, we do have a falling wedge pattern. So rather than a declining trend channel, it looks like we're on our way toward a breakout. We've certainly broken out in the near term here. And that's definitely a falling wedge as well that tells us to expect more. It's gotten above the 20. It does have the 50 and 200 as overhead resistance here. But I have to say, I mean, I like this chart slightly better simply because we do have that falling wedge pattern. I still would really like to see better relative strength on this one, but I like the price pattern and the other indicators, my PMO and the RSI.
EL.
Estee Lauder. I need to buy some makeup. Maybe that'll improve this stock picture because it's not a very pretty picture right now. Let's see, RSI negative. What are we looking at this one for a short or are we looking at this one for a long? It doesn't say, does it?
Didn't say.
Yeah, relative strength, terrible. Let me look at the weekly chart here because we don't even have support levels really showing up. Breaking this very important support level, I can see where you're probably looking at this for a reversal play. I think it's too early to plan on that. Look at the weekly PMO and the weekly RSI. Look at the scooter is at 3.3. This is a dog for sure. This is a dog. I don't know that I would be playing it as a short at this point. The market's looking pretty good overall, but it's just getting really close to being a short candidate because it is breaking down below this very important support level. I mean, I don't like it. I don't see any redeeming qualities just yet on this one. Notice this is going to be our third top beneath the signal line for the PMO, well below the zero line. So don't like it. If I owned it, I'd be getting rid of it. And there you have it.
Okay, take a look at the next question. I don't understand it. Maybe you can.
Where is that 3-digit call list, for instance? I'm not sure what you're talking about, Luigi. I think you're going to need to expand.
Okay, UNG.
Okay. You definitely should talk to this one too, because I know we both have been watching this closely because full disclosure, as far as I know, Dad, you still own it. I own it.
Oh, yeah.
Okay.
This is, it's putzing along on its, well, for UNG all-time lows. Again, I think this goes along with what we're seeing with crude oil. It's just, there's not enough interest yet in that. I mean, the politicians are pounding on fossil fuels, and so far they're not, even though they're oversold, they're still not showing any signs of life.
No.
You need a shorter term chart to see what's going on here.
Oh,
you need something like, no, well, not 30 minutes, but
let me get back here.
Yeah, you can see we keep making new lows and coming off the latest low. Maybe it's going to take off, but
Yeah.
we're in early, that's for sure.
Yes, indeed. It is coming off new lows. I am not going to pad my position at this point because it's just not showing us the kind of information we need to expect it to really follow through on this rally. we've had so many starts and stops on this UNG chart. Let me go back to where I was here. Go back to a log scale. It is on log scale. Yeah, it's still, I'm going to go to 6 months. There we go. We had that crossover buy signal. We were coming off these lows. We even broke out here slightly. Failure. We're getting ready to make that turn on the PMO. This looks like we're up, getting ready to have another short-term rally. If you're playing UNG in the short term, I can see this as a possible buy point, but just be prepared. We're now really low prices here, so you need to position size wisely. It's going to be really easy to get a lot of volatility on it, and you need to make sure your position is in the right size so it doesn't give you too much sleepless nights.
Yeah, again, the futures on that on natural gas are around $2, $2 plus, but it takes a little tiny move in the futures and you get a magnified move in the ETF. So it's hard to make any sense out of it at this point.
Yeah. This is the contract. Okay.
Okay, BASF.
All righty. All right. So in the materials area, remember materials showing some nice movement. This stock, not so much. Relative strength is not so good against the S&P nor against this group, which is already struggling. Does look like we're getting a bit of outperformance as of Friday, but we're not seeing any follow through here. The PMO is flat. RSI is still negative. Rounded top here that really hasn't been broken from. I mean, you could write it, you can annotate it that way, but let's see here. So you could make a case for it breaking out of that rounded top, but really to me, I think it's more included in the rounded top. It fits better, doesn't it? So I would be looking at, I don't see this one as a buy because we do have that rounded top. And while we're seeing these improvements in the indicators underneath, I think there are better choices. It's struggling here at both the 20 and 50-day EMAs. Looks like we're going to get a negative crossover of those EMAs, a dark cross, not quite yet, but could. So not a fan.
Marlene wants to know if we should take profits in Apple.
All right. I don't know, Dad. What is your opinion on that?
Well, it's moving higher. So
yeah,
I'd say put a trailing stop.
Yeah, that's what I was going to say. Yeah, more than likely, you don't want to give up any profits here, but Apple, the market in general, is still looking pretty healthy right now. Apple being one of those leaders. Good for you to be in it all this time. I would follow through with what Carl just said, and that is a trailing stop. I usually like to make my trailing stops a little bit fat just so that they don't get hit right away. But I think that would be a really a great way to maybe take a few profits off the table, maybe not sell the entire position. It'll be really interesting to see what happens today with Apple. They have their big worldwide developer conference, and I can't remember whether they do well right after that or not. But my guess is they're introducing some AI type of virtual reality stuff. So it could be really interesting and some nice follow through on Apple. So I think you're going to be okay for a little bit longer.
Hey, this morning they were talking about Apple's next big product is the watch, and I'll tell you, it's the watches may be great, but it's certainly no iPhone.
No, absolutely not. I can show mine, except I'm not wearing it right now.
Okay, BABA.
Baba, Alibaba. Nice little double bottom in the shorter term that is forming. It's not been confirmed yet. PMO buy signal. RSI is still negative, but stochastic's taking off. Relative strength, again, is a little bit lacking. It's performing in line with the S&P after underperforming it. These are, in the Asian stock world, and I'm not in favor of that. I'm not in favor of banks. Granted, there is upside. Granted, there is money to be made with these, but it adds just that backdrop of risk that I'm not really willing to do. And with things going down with China and Taiwan, I personally am not comfortable going into these Asian stocks. But that aside, just know that there's some extra risk hanging out there in the background. But that aside, the technicals look good on this one, but not great. So while I could see an entry here, you are seeing some failure at the 50-day. Notice that bearish filled black candlestick. It is performing as expected today with the decline off of that candlestick. This just looks weak to me. It's not something I'd be interested in.
Here's one I haven't looked at in a while. XHB, time to get in.
Yeah. Admittedly, this was one of my shorts last week, the week before, was to short the housing, the home builders, and did not turn out well. I was expecting the decline to catch hold, never did. And so since then, we've had this nice little rebound. The chart has changed greatly. Let me do this way so it's a little bit clearer. So PMO is moving upwards. Stochastic's looking good. Relative performance is increasing on that rally. But I just don't like the follow through today. I mean, it did get above overhead resistance, but it just looks kind of weak today.
It's a weekly.
Yeah, that's a good idea. Yeah, the weekly overall looks pretty positive. You had the double bottom. It is not quite fulfilled yet. Double bottom is you look at the height of the pattern and then add it. And so that would take price up a bit higher. So I guess it's not a bad time for this one in the short to intermediate term. Looks better on that weekly chart than on the daily. But I think that overall, it doesn't look too bad for getting in. I like the breakouts. I like the confirmed breakouts, and we don't have a confirmed breakout on this one, but certainly it is something you could consider.
NTR.
Nutrient, specialty chemicals. I do like the way it is rallying right here. It looks like filled black candlesticks, but when we go over to the thumbnail, you can see that they aren't. They are just 3 really nice rally days coming on really nice volume. PMO is turning up, stochastic's turning up. This is your big problem, though. Relative strength today on these charts has not been too good. You can see relative strength against the group is failing here, but it is a very beat down stock. So you may be seeing a little bit of upside movement here. There's a lot of risk that is associated with this one just because it is so beat down. We have to go to a weekly chart to really see where the support lies. That was the strongest level of support, and that was lost. Here's your next level right here at these tops, I would say, or maybe right in here, which it lost. And then coming back, yeah, it would have to come into here. So it looks like we're trying to bounce off those lows, but we really haven't finished testing them. I think that it could go lower, so I don't think I'd be interested.
Okay, ARLO.
Software area we know is good. Relative strength, again, we can come right back over here and see that this one, it is performing in line with the group, but that isn't helping it perform against the S&P. We know that we want to outperform the benchmark, so that's why I include these relative strength windows on my charts, because that's what we want to do, right? It's beat the benchmark. We can't do that with this stock. We have, let's see, sort of flagpole-ish, but the flag would be sideways, which is not something you want to see. I don't know. It is coming out of overbought territory, so this pause was good for it. That PMO, gosh, big top and overbought territory, getting ready to trigger that sell signal. I can't say that I like this one.
Okay, UNH.
I'm sorry, guys. It seems like everything you're presenting with, I'm not really a fan of. Nice double bottom here, PMO buy signal, PMO above the zero line. Here's your problem with relative strength, but it's against the SPY. It's performing mostly in line, but it could start to outperform it at this point because the group looks like it wants to outperform. Stochastic's looking good. I mean, I think this part looks good. It's the relative strength again that's giving us a little bit of heartburn. It is against overhead resistance here. This is the confirmation line for this double bottom. Hasn't confirmed, but if we get the breakout here, that would be pretty good confirmation, not only of the pattern, but just a breakout from very strong overhead resistance. I think it looks pretty good. I just have issues with its performance. It's performing okay against the SPY though, so I think I will take it. Silver Cross is on its way. I think that's all we got.
I do. I think we got, yes, I think you're right.
I think at 9:59, we got to close this thing. Everybody, we really appreciate you joining us. Do go and check us out at DecisionPoint.com. If you haven't tried us out yet, you can use coupon code DP Trial and the number 2. DP Trial and the number 2, and you will get 2 free weeks of any of our DecisionPoint products. So go check us out, DP Trial 2 for your free 2-week trial. That's all we have for you today. Good luck and good trading.